Good morning. It's Tuesday, the 4th of February, and this is Govindraj Ethiraj, headquartered and broadcasting and streaming as always from Mumbai, India's financial capital, and the top stories and themes for the day. Trump tariff shocks hit Indian markets. The rupee takes a sharp knock as the dollar surges. The new oil routes that could kick in on Canada and Mexico tariffs. Could India benefit? The Income Tax Department admits it was adversarial earlier, but will now move to trust. And signs of policy consistency and certainty in the union budget, including in transfer pricing.
This is the Core Report with Govindraj Ethiraj.
The tariff shockwaves. The shockwaves triggered by US President Donald Trump's tariffs on Canada, Mexico, and China hit Indian shores, with the stock markets taking a hit on Monday. While the markets had flatlined on Saturday during the special session accompanying the union budget, given that the budget did not have any specific incentives for investors, the underlying trend in the last few days has been somewhat positive. Also because institutional investors have begun bargain hunting, including for large cap stocks, it would appear, and foreign portfolio investors have also to some extent returned to the markets after staying away, or rather selling, for a while. Now, the tariff move has obviously created havoc with everything and everyone's calculations. The BSE Sensex fell 319 points to close at 77,186, while the NSE Nifty50 was down by 121 points to 23,361. All international markets took a knock, except, of course, the dollar, which jumped again. Speaking of which, the Bloomberg Dollar Index was up 0.9%, trading once again near a two-year high after Trump announced those tariffs. The Canadian dollar fell to its lowest since 2003, and the euro has also weakened on Monday. Bloomberg said, quoting Goldman Sachs strategists who were projecting the risk of a 5% slump in US stocks because of the hit to corporate earnings following those tariffs. Wall Street takes a hit too. Wall Street got hit by Trump's tariff calls because the market sees it as a precursor to a full-blown trade war, which of course seems imminent, which in turn would disrupt global supply chains, drive up inflation once again, and slow down the US economy. Futures tied to the Dow Jones Industrial Average fell about 1.4%, S&P 500 futures 1.6%, Nasdaq futures about 1.8%, according to CNBC and overnight. Earlier, the leading European equity markets also fell, with Germany's DAX benchmark being down about 2%. Even Bitcoin fell to about $95,000 from over $102,000 before the weekend. Ether lost 12%. The ICE US dollar index, a measure of the US dollar versus several currencies, went up 1%. And meanwhile, Canada has responded with retaliatory tariffs of its own, while Mexico said it would explore tariffs on US imports, and the Chinese government has said it would file a lawsuit with the World Trade Organization even as it contemplates tariffs. And by the way, India is not retaliating and has said that it will not act protectionist, which is of course the most interesting move of them all and is obviously favorable to Indian consumers. Of all three, Canada seems determined to respond and is likely to do so first. When I say three, I mean Canada, Mexico, and China, at least going by the statements so far. Indian factory output is up. India's factory activity started 2025 on a positive note, growing at the quickest pace in 6 months in January, thanks to steady demand and strong output, according to the HSBC Final India Manufacturing Purchasing Managers Index, compiled by S&P Global, and that rose to about 57.7% last month from December's 12-month low of 56.4%. All of this is from Reuters. The index has been above the 50 mark, separating expansion from contraction since July 21. Domestic and export demand were both strong, supporting new orders growth, HSBC said. Speaking of tariffs and dollars and the dollar index, the Indian rupee fell 67 paise to a record low on Monday after US President Donald Trump slapped those tariffs on imports from China, Mexico, and Canada. All of this has obviously increased the nervousness about what the impact of a global trade war, which effectively is what it would be, could be on the US economy, or for that matter, even other economies. The rupee declined to 87 rupees 28 paise per dollar before closing at 87 rupees 18 paise, down about 0.7%, its biggest single-day percentage loss since January 13th, according to Reuters. Asian currencies also fell after the dollar rose on Trump's tariff calls, which imposed tariffs on those three countries. The tariffs kick in on Tuesday, so there is a day of bargaining and negotiating still possible, which is presumably why Trump had left a couple of days between the signing of the orders and those orders turning into action. Now, going beyond 87 rupees to the rupee is a new low and has some significance, even if expected somewhat. I reached out to Kunal Sodhani, foreign exchange expert and vice president at Shinhan Bank, and I asked him whether the rupee range broadly was still in control.
So, if you ask me about the levels first, I don't think there was a pattern of a channel between support and a resistance. After the new RBI governor has come in, and also if we talk about the statements which has come from the finance secretary of India, they have been very clear that rupee will find its own demand and supply. Yes, there may be some interventions in interims to curtail some kind of volatility which is excessive in nature. But I don't think there is a predetermined path of a narrow range which used to be earlier. And that is why we have been seeing levels moving higher. Though we have seen FX reserves moving left towards almost 13-month low. But I think they understand that the intervention also comes at a cost. It's about the import cover as well as it comes with a cost. So as you rightly asked me, I don't see a predetermined pattern. And if you ask me the base, I think 86.20, 86.40 levels is acting as a good base for now. And a slow, steady, gradual depreciation, 3 to 3.5% can be seen for the year.
After Trump announced tariffs on Mexico, Canada, and China, we saw both the Mexican peso and the offshore Chinese yuan and the Canadian dollar falling substantially. And of course, India has fallen too. So the dollar is now back to its 2-year high. What is your sense of the strength of the dollar itself? As in, how strong can it get? And what is the, let's say, the basis that supports it? Or what's driving it to these levels or these newer levels?
First of all, Trump had three important focuses. One obviously was tariff, which he had told that February 1st will be the date where he will announce firmly in terms of numbers. So he definitely announced, as you focused on, that 25% on Mexico and Canada and 10% to start with China. Now, Donald Trump is very peculiar. Even when he had a term in 2016, he was clear that whichever countries US is running trade deficit with, those countries which will incur tariffs, because that's something which disturbs him. And as we put in numbers also, US runs 30.2% deficit with China, 19% with Mexico, and 14% with Canada, and even 3.2% with India. So now these are the four countries where the important focus will be, apart from even the Eurozone. So they started with it. These tariffs will be also important because the statement which also came from the US Treasury Secretary, which states that they will be imposing tariffs 2.5% and increasing it up to 20%. But the major focus was they will also reduce taxation. Now, if they will reduce taxes, which was even done in 2016 tenor, then the gap has to be filled from somewhere. And that somewhere is nothing but tariffs. That's what I understand. So that's the first move which will obviously push the dollar index higher, because once the tariffs are imposed, it creates more of inflationary environment into the market. And once there is inflationary environment into the market, it's more dollar bullish across the majors also and across Asian currencies also. So dollar index from here, as if I put into numbers, then I think the space immediately is towards 112.40, followed by 114.70, which has been the near highs, which was 114.70 roughly. And if I talk about a base where the bottom can be, and somewhere it's finding important support, is 107.20 to 107.60 band. It has been bouncing from those levels time and again. So I think that acts as a strong base. And I support dollar bullishness will be there. But yes, it will not be one-sided, because retaliatory tariff actions will also be taken, as they have been already announced by Canada, Mexico, as well as China has gone for a lawsuit with the WTO. So some kind of retaliation will happen. And considering Trump's nature, it's very uncertain. You never know, he pulls back something for a month and then again he comes back. So volatility will be there. Slow, steady depreciation of rupee is expected. But I don't see any wild move towards 90 odd. That's not what I'm eyeing.
Right. And if we were to look at purely domestically, including, let's say, India's own need for dollars to buy oil if prices go up. I mean, we're buying oil all the time, and it's not clear right now. I mean, it looks like prices could go up, but they may not. So what's your sense on the demand side?
So first, demand for dollars definitely there because of couple of reasons. One, in the system also, we are running with the liquidity deficit. So if I talk about a liquidity number, is around 3.1 lakh crores of deficit. RBI did announce some measures in terms of OMO, buy-sell swaps and VRR, which did infuse or will infuse liquidity to the tune of 1.5 lakh crores. But even the dollar liquidity is thin. I would not say, the demand for dollar is raising. And even if you want to buy dollar for your leisure trip, the rate you will get now is around 88 if you want to buy physical, which also shows that there is demand which is firm. At the same time, there is supply constraint for the dollar. Plus, if I talk about importers also, I have been observing when I speak to my own clients, there has been some pressure mentally that even the forwards have started rising once again. The 1 year forward had dropped to 2.1%, and now again it is moving towards 2.3%. So this demand will definitely persist to remain. In interims, yes, there can be some buy-sell swaps by RBI in order to curb some kind of volatility or excessive sharp depreciation. But I think, as I said, demand from importers as well as from the retail side or corporates will always be on a higher side, considering a lot of uncertainties both on tariffs as well as on the geopolitical front. Secondly, answering your question on the crude oil. So, crude oil definitely is in a good narrow range for India. So, India is at a sweet spot when we talk about Brent crude prices. We did see a sharp rally towards $81, $82 in between. But again, we were lucky enough that that cooled off towards $75 to $76 per barrel. So I think the broader range still remains with $71, $72 acting as support, while $82 per barrel acting as a resistance. There's nothing firm on the geopolitical front. It's more the focus has completely turned off towards America first and the Trump trade. So I think from the oil perspective, I don't think any pressure at this point in time, even going forward.
Right. Kunal, it's been a pleasure speaking with you. Thank you so much for joining me.
My pleasure. Thank you so much.
Trump's tariff wars. And we're back to our section on Trump tariff wars, and with obviously some developments. President Donald Trump of the United States has said that the tariffs he has imposed on Mexico, Canada, and China may cause short-term pain for Americans. Meanwhile, the European Union is also gearing for tariffs on its exports into the United States. Trump said he would speak on Monday with the leaders of Canada and Mexico, both of whom have announced retaliatory tariffs of their own, but downplayed expectations that he would change his mind. That's Trump downplaying expectations that they would change his mind. I do not expect anything dramatic, he told reporters as he returned to Washington from his estate in Florida. And he said, according to Reuters, that they owe us a lot of money and I'm sure they're going to pay. He also said that tariffs on the European Union would definitely happen, but did not say when. He also told reporters that they don't take our cars, they don't take our farm products, they take almost nothing and we take everything from them. European Union leaders were expected to discuss tariffs in Brussels on Monday in the wake of Trump's comments. That's yesterday. Chancellor Olaf Scholz of Germany, which is also Europe's largest economy and reliant on exports, including the BMWs and Audis and Mercedes that come to India and go world over, said the bloc would respond if necessary with its own tariffs against the United States, but stressed it was better for the two to find agreement. And the new oil routes. And the India energy segment. US oil refiners are set to be hit by tariffs on Canadian oil will look to Latin America and the Middle East to replace suddenly more expensive Canadian and Mexican crude following President Trump's tariff salvo, according to Bloomberg. American processors are likely to seek alternative grades of the types of heavier oil produced by neighbors from Brazil to Guyana, and given their relative proximity, the traders said. But interestingly, they could even source crude from as far away as Iraq, although it only produces a limited amount of so-called destination-free cargoes that can be exported anywhere, those experts and traders told Bloomberg. Trump's moves have hit about 4.5 million barrels a day of oil imports from its neighbors, the bulk of which comes from Canada, which will now face a 10% duty, and Mexican crude will be hit with a 25% duty. All of this could mean a rerouting of supply chains, and thus meaning tankers will have to move for longer periods in different directions. For example, some of that Mexican and Canadian crude could go towards Asia. though it would not be easy to switch suddenly and create those logistics changes, according to experts. Canadian producers will be forced to lower the Western Canadian select prices to offset the 10% tariff, according to JP Morgan Chase analysts quoted by Bloomberg, who also said that Mexico can redirect exports to Europe and Asia, while the US can replace Mexican crude with longer transit time alternatives. And the impact on the US? Well, it's more in the West or Midwest, which depend on Canadian oil, who will face higher feedstock costs due to those tariffs. It would mean an extra $3 to $4 a barrel borne by Canadian producers and $2 to $3 by Midwestern consumers, Goldman Sachs said. And this will obviously affect the price of refined oil products elsewhere in the US. So expect prices at the pump to go up. Importantly, this could help Asian and European refiners who may benefit from stronger markets for gasoline and diesel, Bloomberg said, adding that Chinese and other processors, including in India presumably, that have been struggling with sinking margins following the sanctions on Russian oil may benefit, according to Bloomberg. This segment was supported by the India Energy Week 2025, scheduled from February 11th to 14th in New Delhi, and you can register for the same using the link in the show notes. New income tax moves. The tax measures announced in Budget 2025 are expected to push up bank deposits by 42 to 45,000 crore rupees, strengthening their lending capacity, according to a senior official of the Ministry of Finance in a report quoted by Money Control. A rise in deposits is expected on the back of higher savings among senior citizens, non-senior citizens, and taxpayers benefiting from that enhanced tax exemption limit of 12 lakh rupees, he said. About 100,000 crore rupees is revenue foregone. Of that, at least 20,000 crores could come back to the banks, and not everybody will spend this. Some will be kept in fixed deposits. Altogether, some 42,000 crores could come back, according to that official, which also means that not all that money saved could go into buying consumer products, as some, and I only think some people were hoping and maybe even praying. The good news, of course, is that the increase in deposits is expected to boost liquidity in the banking system, allowing banks to extend more loans to businesses and individuals. Meanwhile, the Central Board of Direct Tax Chairman Ravi Agarwal has said the Income Tax Department has transitioned from an adversarial entity to one that adopts a more participative approach, which is, of course, nice to hear, given that it is an open acknowledgement that the income tax was adversarial at some point of time. Speaking at an industry meeting, he said that the department now operates under the guiding principle of trust first. He also said the administration is committed to fostering stability and simplifying business operations, and noted that governance in direct taxation has undergone a transformation, with policies increasingly focused on ensuring transparency and enhancing the ease of doing business. He also quoted several examples and announcements in the union budget speech that was presented on Saturday to bolster his case. While we have to wait and watch to see whether the Income Tax Department will indeed transition to a new avatar as it's promising, and meanwhile, there's a fair amount of fine print from that union budget still waiting for analysis. For example, transfer pricing is the bane of every multinational or Indian company operating across borders. Transfer pricing has seen a huge amount of litigation, crippling companies and also making it difficult for them to plan and invest ahead. The latest budget appears to have taken some steps to ease matters, and I reached out to Ajay Rotti, founder and CEO of Tax Compass Advisors, a tax and regulatory services firm based in Bangalore. And I began by asking him to talk about the changes to transfer pricing law, and also to start by telling us what transfer pricing was about, before moving on to whether these steps indicated a larger easing of tax administration rules and regulations, and thus ease of doing business.
Transfer price is essentially the price at which goods or services are literally transferred between two related parties. So, when two related parties are dealing with each other, you can set the price in such a way that you can move profits around. You can move profits from one country to another by paying lower or by paying higher and therefore going profits, etc. So transfer pricing is a mechanism where those prices are tested, and any transaction between two related parties has to be like as if those two are not related, and the price at which you would have bought from a third party. That's in simple terms what transfer pricing regulation is supposed to do. Now, how you set the price like it would be with a third party is you find a set of comparable companies, what is their margin, what's the price at which they operate, and therefore you used to do. So India continues to have a peculiar problem where our litigation is centered around those choosing the comparables. Therefore, companies would have litigation for the last 5-7 years, literally for every year on the same issue on transfer pricing, with margins being adjusted each year. And that is at least something that the government has recognized and seen the need to address. That's what is changed in the budget. And let me tell you what has changed. And the FM announced this in the speech. And there's some bit of amendment which has already happened. And some of it will come out by way of notification of rules as we move along. So what essentially they have proposed is that if you're going through a transferring audit in 1 year, which means the income tax department is examining whether you've set the price right, you can opt and make a declaration to tell the income tax department that whatever you decide in this year for the same transaction and similar transactions, I will apply the findings for subsequent 2 years, which means you're going through audit in 22, 23, for example. Of course, you can't apply it for this year, but I'm taking it as an example. And you tell them whatever are your findings for 22, 23 financial year, you apply it for 23, 24 and 24, 25. So what happens is, what would normally have resulted in 3 orders, 3 years litigation, today comes and becomes 1 order. And with that 1 order, you are set for 3 years. I think this is a big thing. This is going to change. There are some, of course, some doubts in the way it is drafted, etc. But going by the intent, I'm sure they're going to address that. And the rules are to be notified as to which form you have to use when you have to make these declarations, etc. From a multinational perspective, coming into India, or even Indian companies that are having cross-border transactions, one of the biggest issues has been litigation and certainty. So this is going to make a huge difference according to me. And also, of course, it impacts the GCCs, etc. Interestingly, in the economic survey, there was a paragraph on GCCs and there was a comment to say that there are certain tax rules which are changed and bringing certainty in transfer pricing, very specifically mentioned. So I think this is part of a larger thing. One of the really good moves in this budget from a corporate international tax perspective, I would say.
Right. And GCCs or global capability centers is something that, I mean, everyone is now referring to, focusing on, and also looking at how to make things easier. Now, you were also saying that basically the certainty in the transfer pricing regime or relative certainty is also now extendable in some ways or visible in other parts of the way the budget document has been drafted.
Yes. See, over the last few years in particular, we've not had these minor tinkerings of changing something, number of years that you can do something, or the rate of TDS and then bringing it back or rolling it, etc. Earlier, finance bills used to run into many pages, hundreds of clauses, small changes in so many sections, sometimes changes to sort of negate rulings, negate Supreme Court decisions which the taxpayers have won, etc. That has sort of reduced. Also, there are no changes. Directionally, it's been the same. They have not had tax incentives, tax holidays, which has been done away with. We've not got it back except for IFSC, which is the gift city, the related things. Interestingly, there are 2 tax holidays which they have extended. Normal thing, Govind, earlier, you want to extend a tax holiday, you would have done it by 2 years, another 2 years again because somebody requests. Both the extensions this time they've given for a 5-year period. Some of these are small things, but really give you certainty. Instead of extending something for a 2-year block twice or thrice, you have today taken a call to extend it once for all for 5 years.
Yeah.
So some of these are there. I think more and more, and I've now tracked and followed budgets for over 20 years, more and more it's becoming a non-event, which I think is a good thing. See, with GST going, half of it was gone. You couldn't have changes on indirect tax year on year coming as a part of budget. Now, even on direct taxes, I think we've reached a place where a lot of it is stable. Some of the things needed, and mostly because of request by the industry or even because of administration, etc., just changing. I'm not seeing any change which is sort of without a basis that's being carried out these days.
Right. So you're saying in all the examples that you've quoted, Ajay, you're saying that basically it reflects a certain directional, firstly, a direction, and then a directional stability, which, of course, people in the world of tax and audit have been asking for and continue to ask for. So speaking of what people are asking for, there's also a direct tax code coming, which people thought would be presented with the budget, but it's now being presented next week. I think there appears to be some expectation versus reality situation here.
So in terms of timing, the FM consistently was saying that it will come as a part of, we'll be presenting it during the budget session. Some parts of media and even some people had read it to be on the budget day, etc. That, leaving that aside, I think, yes, it's expected to be presented in the next week. The FM did give some direction and some hint on what we could expect, in my view. because while talking of this, she said, we've done this whole thing of criminal law and brought in BNS as a replacement for IPC. And she said this same spirit of Nyaya will be continued in income tax, making it simpler, changing the wordings, language, taking out sections which are not needed, etc. So in my personal view, I think that's where directionally we are on the new tax code. I don't think she will revamp the structure. I don't think there'll be a huge change in the way income is computed. Rates, I don't think will be touched at all, because there are some tedious changes which have been done in the budget. And that clearly is an indication that those are not kept for the new bill that's coming. I think new bill is more for simplifying language, taking out sections, reducing the size of the code, etc. But it'll be an interesting watch. The other reason I believe that it may not really be a huge change is because she's not done public consultation.
Well, I thought they did public consultations, 22 subcommittees, 6,500 responses.
Yeah, but by putting out a code,
Okay. A draft in the public domain and so on. Yeah, okay.
there may not be too many radically changing the entire tax structure and things like that. But I think to be more of language simplification, which is good, which is needed. A lot of our litigation is because of some of the sections are worded. If that is going to get cleaned up, I think it's a good thing.
I saw that you've been commenting on tax exemptions versus deductions versus rebate in the context of the 12 lakh or tax below 12 lakh, which you don't have to pay anymore. So tell us about what is the confusion that exists and why is that?
Yeah, so I'll tell you why the confusion is there only for one reason. While the FM announced that there's no tax for people having income below 12 lakh rupees, when she presented the new slabs, it said 0 to 4 nil, 4 to 8 lakhs 10%, and 8 lakhs to 12 lakhs 15%, and so on. So the question was, if up to 12 lakhs there's no income tax, why is there a slab starting 0 to 4 and 4 to 8 and 8 to 12? Does that really mean there is tax? But what does this whole no tax below 12 mean? And I'll tell you why it's structured that way. Is the no tax up to 12 lakhs doesn't come because of the slabs. One way to do it was to say 0 to 12 is nil, and 12 onwards you start paying whatever taxes you do. When you do that, Govind, what happens is anybody earning less than 12 lakh rupees is completely out of the tax rate. He or she need not even file a return of income because you're below 12, right? You don't need to file. So the way they've done this, and this is not something that they've done this year, this is how the earlier 7 lakh limit of no tax was also there. So there is a rebate given. Rebate is a reduction from your tax liability. You compute your tax liability and you reduce the relief that is given as a rebate. So they have said 60,000 rupees or your actual income tax, whichever is lower, you get as a rebate. So at 12 lakh rupees, your tax liability is 60,000. You compute 60,000 and you say, I have a relief which I'm eligible for 60,000, which is an unconditional relief. You don't need to do anything. You don't need to invest anywhere. Nothing. You just straight get it in your return of income. Therefore, your tax payable becomes zero. What this does is it protects taxpayer base. So all the people who are filing return of income will continue to file returns of income. And then if there were whatever 6, 8 crores, 7 crores, whatever that number is, were filing returns will suddenly not become 1 or 2 crores today. Therefore, one way it is good because you are giving relief, but you're not taking anybody out of the entire tax compliance in the net. Then the question was, is there a, why would somebody have to file return if there's no tax liability? But as we moved over the last few years, I don't think you need anybody to file your simple income tax return. It just happens online. I think in balance, it is good. The last and the other reason why they have done this is for people who are above the 12 lakh limit. So assume somebody is getting 50 lakh rupees. Then that person doesn't get the benefit of 0 to 12 lakh rupees. There is tax payable. Therefore, you are giving this relief only to people who are below 12 lakhs. People who are earning more will pay tax, but at a different slab rate, which gives them the benefit. So 2 reasons why it's structured as a relief. Does not change the liability in any manner. I think people were expecting to see that the slab itself will have become 0 to 12 is nil. And that's why this confusion has arisen.
Right, Ajay, thank you so much for taking us through both the corporate and the individual side of taxes and the fine print. Thank you so much.
Thank you, Govind.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.